Good morning, traders, or good day, I should say, since it's not morning everywhere. Sorry about the delay in getting started, a bit of a technical issue. I'm working from home today. It's a holiday, and the kids are home, so here I am. Again, thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, overall, seeing more of the same. This morning, we have to treat a little bit differently in that it's a bank holiday, even though the futures are open, the markets are open. It is a bank holiday. U.S. dollar denominated transfers and transactions are not taking place today, including on Eurex. However, we do have a market that's moving around, and it's decided that this wouldn't be a day off. So this morning, as far as what's on deck, what the market sentiment is. Interestingly, gold futures are way off this morning, down $15 or 1.24%. That's fairly substantial. Crude oil is also down 1.16%, trading at 73.47, down 84 cents. The DAX is down 114. The Euro Stoxx down 28. The leaders today, the Japanese yen up 35 pips against the dollar, and the U.S. dollar index is up 32.5 cents or 0.34%. Seeing allocation is more towards safety still. Um, Risk is still off, and that's what we've got coming in. Don't expect too much today in terms of movement. But hey, I said that on Friday, and I ended up occupying myself with other things and missing the drop that occurred that day. I came in a little bit later to notice that things have been moving around. So who knows? As far as what's on deck for today, not seeing anything. Some numbers already came across the European markets, also the Chinese Zixin. I don't know how to say that. China PMI services came in, the prelim number. It's pretty important. And again, it's a holiday in the United States, bank holiday. That is not a business holiday, but a bank holiday. The week ahead is relatively busy in terms of releases. We're seeing a lot out of Europe. Tomorrow, German current account, trade balance, ECB's Mersch and Villeroy, Fed's Williams and Harker, and BOE's Broadbent. Wednesday, UK GDP services, industrial production, and so on and so on and so on. Thursday, we also have some numbers. ECB's Draghi speaking, as well as Kerr and BOE's Carney at the IMF World Bank. And then Friday, German CPI, Eurozone industrial production, U.S. import prices, Michigan sentiment, ECB's Lautenschlager, Fed's Evans, Bostic, ECB's Draghi and Kerr again at the IMF and World Bank. So nothing earth-shattering this week. There's a fair amount of central bank talk, but it's pretty consistent throughout the week. Let's take a look at what we expected on Friday versus what we actually got. Come on, screen. So here's what we expected. This Friday we were looking for a bit of a tame, given the drop on Thursday. Friday was expected to be fairly tame. Fairly tame. I'm sure you guys can hear me right. There shouldn't be a problem hearing me this morning. Fairly tame. I expected the market to form a base, potentially for a continuation down to finish up what we started on Thursday, but I did expect it to be fairly quiet given that NFP came in the morning and the market basically priced in the NFP. It shot up, pushed down, and it ended up in the middle. It ended up in the middle, and that informed a lot of what I was expecting on Friday. Also, if you look at Thursday's profile, and I'm not going to do Thursday's Trader Bite again, Thursday's profile shows that we had a fairly balanced middle here, balanced profile. It was not really a trend day down. And so coming into Friday, the expectation was, it's most probably going to simply uh, have an impulse or two, but mostly balance and stay within the range to into the weekend, to the long weekend, and then we would get our next move once we come back on Tuesday, tomorrow. And so that's what I was expecting. So neither one of these worked out as I tweeted out, commented in the Convergent chat room that boy was I off. But you know what? The goal for me is not to be a an oracle of markets or predictor of markets. I mean, nobody can do that. If you could, it would be out of luck for a short period of time, in my opinion. Our goal here is to take the information that we have and make something of it. So here's what happened on Friday. Very, very busy. A lot of rotations. So quite a busy chart. Look at all those rotations. Um, just from the open, we squeezed up, so it looked like we were doing a scenario one, push above the overnight high, and then from there it just dropped below the mid here for a retest, and then boom, just continued down. The low is held in an area near stock zone. These stock zones below I didn't touch. The low of the day is a stock zone, um, and it ended up turning there. But how could I have predicted that it was going to turn there? I could not have. Um, it did respect a lot of my zones coming down, though. We did get at least a small bounce throughout these zones. However, the buyers just were very, very, very poor in terms of performance. Didn't get much on their effort. With the close, one thing we want to notice here is that this is the prior day's low, and we closed with the point of control inside of the prior range. The close was right on top of the mid. This is the mid, the blue line. The cyan line here is VWAP. We closed above the point of control. This looked to me, it looked to me like it ran out of time. It ran out of time on Friday to take a test, take a run at 2902.75 above. It was forming what looked like a a push, bounce off. Again, it came off, then it pushed again and again and again. It's like a kind of a nacho bowl formation or something. It's just multiple tops here, and just the market closed and it didn't have a chance to push on higher. But it looked like it wanted to continue higher, and the order flow was starting to support that view as well. Overall, the delta on Friday finished somewhat neutral. If you look at the overall delta, so the top pane here, PANE, this top pane here is the pricing on the S&P, and then the lower pane shows the breakdown of the aggressors in the terms of in terms of um, in terms of delta. And so what we have is the bar chart, the orange and white bar chart is the total delta, and you can see that it ended up pushing back up to negative 23.55, almost coming back to being neutral. Um, but here's what's interesting. This line here is the delta for trades that were going off that were greater than 200 lots, and that was pretty strong coming into the close. So look at the yellow line is everything greater than 200 lots. This is what I'm classifying as large lots, and this is based on uh, really accurate tick data from the exchange. We use the tick ID tag from the exchange to reassemble trades into their true size, the true fill, as opposed to the broken down fill that's reported by your broker feed. And as you can see here, the large lots were really on the buy side on Friday, especially into the close. Very strong participation on the close for the very large lots. Large lots is everything that's above 5 contracts, and small lots, this orange, this orange down here is everybody who is trading at 5 contracts or less. Um, that's the small lots definitely were leading the move down, but the large lots, everybody that's 6 lots or higher, ended up being positive on the close, and the very large lots, the big lots, um, the third sigma size, tick size or greater, were very strong into the close, positive on the day, with a net delta of just negative 23.55 given the movement. Okay, so that's how things look like. A lot of this is being driven by yes, it's being driven by news and so on, but it's an important thing, and I'm not going to get into this too much here. It's an important thing to keep an eye on the Treasuries. The Treasuries had really big movement Thursday and Friday to the downside. The price of Treasuries dropping, therefore yields rising. It's an important relationship to understand. This makes it more expensive for businesses to operate on the curve. Also, over the weekend, just as an anecdote, and I know I've run out of time, uh, I went to a birthday party where it just so happened to have a lot of real estate agents and brokers, and at least here in Chicago, whereas I believe 6 or 9 months ago, you used to have to go in with an offer that it's at least at the ask price, at the sale price of a property, and it's actually, if you don't go in at the ask with your bid, they won't even look at it. And and most of the time, homes sold for higher than the ask, as competition, buyer competition. So in the last 3 or 4 months, apparently, and these are agents on the ground, um, the inventory continues is starting to rise, and to me that indicates something, anecdotally, but it does indicate something in terms of what the housing market is doing. We're likely to see those numbers hit us on the reports pretty soon. Anyway, I'll cut it short here. Remember, I started about 10 minutes late. This morning, we're trading right near the overnight low. I did not, well, a quick look at the overnight action to carry us forward. Pretty noisy open. And then as the Europeans came in, sellers, remember the DAX and the Euro stocks are lower, and we have a double bottom now, a weak low with a double distribution right into that 28.90, 93 area. 94 is the close. 28.9250 or so is the 28.92 actually. is the LVN in between, and this is looking kind of weak. It's likely to continue to drift lower. Okay. This morning, the open is likely to be an open auction. We're inside of the thick portions of yesterday's Friday's profile. I believe we're likely to make an attempt higher, probably push to 28.90 or so, and then I'm looking for an impulse down. I'm looking for a slow market. We're likely to test this 28.73 and a quarter, okay, for a bounce back up and stabilize into tomorrow. So that's really what I'm looking for. I'm looking for it to push higher, but I'm looking for an impulse down to continue what is a one-time framing down. Remember, lower highs as the immediate trend. The secondary is the opposite. This morning, I'm going to be very reserved in the way I'm going to approach the market. I'm looking for it to drift down, push through the overnight low, drift down, get into this weak low from Friday, 28.73 and a quarter, push through, impulse up, consolidate back at the high volume node, and then continue into the point of control for a test as high as the 28.95 stock zone. I'm not going to put up a trending scenario 3 or 4. You can come up with those yourself, but overall, there's a slight change in the way the market is behaving currently. So be cautious. It's good to let the market kind of set up in the morning when it opens, and then just let it do its thing before you dive in. Remember, our job is to figure out which side has the power and to trade from that side. Okay. Good luck, everybody, and I'll catch you tomorrow morning. Take care.